In this video, we're going to review a single family real estate investment property. We're going to talk about how we purchased it, where we found the deal, how we're going to fund it, what renovations will be needed, and then what's our ultimate exit strategy, and how do we determine comps or comparable sales. We'll start off with, this property is in Indiana, Albany, single family. It's a 3-bedroom, 2-bath house, 1,040 square feet. This is what the property looks like here. You can see it's pending on Zillow. That's pending with us. Exterior condition looks good. Maybe just trim some bushes back. Interior here, you can see the flooring, good condition. Walls are good condition. Cabinets look good. If anything, put in new appliances to make it sell a little bit quicker. Again, here's a picture of the bedrooms, overall good condition. One of the bathrooms, another bedroom, and another bathroom in the garage. So overall, good quality condition. So we were thinking, can we just buy and relist this property as is on a multiple listing service, or even just add new appliances to it? Talking to a local agent, before we actually talked to the local agent, we did our own analysis to see if it was a potential deal that we could contact someone locally. And with that, here are the comps. So again, we primarily just focused on this little development here where the property is. And you can see here, comps are ranging from 130 to 140. This is our property, the bogus number. I don't know what that is. Maybe something through the foreclosure process. And then this low comp here, we looked into that. Again, it could be bad data or what the property was owed on it. It was lost to the sheriff's sale. So didn't become an REO, but it was sold at the sheriff's sale steps through the foreclosure process. The interesting comp here is an exact replica of the auction property. It's a 3-2, same square footage, same layout. And you can see here, similar cabinets that we have in countertops. It has dated appliances, or the flooring is a lot poorer condition than the auction property. Definitely some new rugs here in all the bedrooms. Bathrooms, similar condition to the auction property. And this is a 129 comp that we got comfortable with. Then we also looked at the active listings, and there's only one active listing in the area. It's about 60, 70 square feet smaller than our subject property. This is listed at 150. And here, however, and it actually has one less bathroom. It's a 3-1, not a 3-2. This is new paint, new flooring, essentially. And you can see here the bathrooms and the kitchen cabinets look similar to the auction property. We said, this property has got potential. We reached out to a local agent. Local agent came back stating that they believe in as is condition, they'll get anywhere from 125 to 129 as is, really highlighting the same comp that we saw, the 129 comp that went pending in 2 days. So with that analysis, we said, what does it look like on a conservative basis if we just buy and relist it as is for 120? We won the property at 75.5. You have a buyer's premium that you pay the auction sites, adding some holding costs, such as private lenders and closing costs, and you're all in at 85 something. You sell for 120. You're looking at 26,000 and change for a quick, 5-month hold or 31% ROI on that property. So these are great examples of easy wholesale deals that we find on auction sites. Now, we're not assigning a contract when, some other people talk about wholesale. We actually buy it at auction, hold it, and then resell it. But that's an easy strategy where we don't have to do a rehab here. We could get it below market value and just put it back on the MLS at market value. And it's an overall good condition that doesn't need much work at all. So that's an example of an easy wholesale deal that we've seen based on our analysis. Now, another thing I want to highlight on, how do we fund these types of deals? We use our own funds. We use asset-based lenders out there, and we also use private lenders. And an example of a private lender on a deal like this is, why would someone want to private lend on real estate? Well, if we look at national average money of CDs, this is just quick Google search. You're talking about 1 some percent. And if you look at national average of savings accounts, average is 42 basis points, might get as high as 475. So knowing those facts, if someone has $100,000 and on a real estate deal, like something like that, they could lend at 10%, However, if they decide to keep their money in a savings or CD, I'm going to give higher rates here than the national averages. They might earn, call it, 3.5 to 4% on a CD or a savings account. Just use the full year to keep the math simple, 12 months. In this example, you would earn $10,000 on your money. This example, you would earn 3,500, which is 6,500 less than this. Or on the CD example, you would only earn 4,000, which is 6,000 less than the 10K. So that's an example of why people also lend on real estate, to kind of diversify their portfolio, earn a little more interest on an asset, or on money that's backed by real estate, no different than a bank. So if this is something of interest to you, and deals like this are of interest to you, feel free to reach out to us and we could have a conversation. If you have any other questions on this property, feel free to drop them in the comment section. And if you got some value out of this video, smash the like button. And again, happy to answer any questions that you have.